Greetings. Welcome to my weekend market recap 23rd July 2023. I'm Sagar Nandi, retired IT professional swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website, Twitter handle, and YouTube channel as shown on the screen. All these are open to the public and you are most welcome to make use of them. Disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. I use the Q systems for my trading and only Q systems. All the Q components run on the Metastock platform and the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with a look at the live chart starting with global markets. Australian market first, all ordinaries. Once again, if we look at the Q trade setups, we can see how well they are designed for different market conditions and how they are playing out. In the previous webinars, I mentioned that in a sideways market, Australian market is in a sideways range now. In that kind of market, we buy at the lower edge using proper checklist conditions, proper trade setup, and I can see on this day we had a bull release signal with bullish pressure. So that was the time to buy at the lower edge using the box setup, and that gave a very profitable swing trade. As of now, it has stopped right at the upper edge. That would be the profit booking point. You could also book profit along the way when the risk distance was covered. Now what? Now at the right edge, I can see, you can see also, there was a bearish indecision at the top on Thursday, and on Friday we had a bear release. However, the candle shape is indecisive and we don't have any bearish pressure. So we would not buy now, we would not short now also, because the box setup conditions are not met. If next week price can come down from here, then that will give the required conditions for both a box short setup as well as for a bounce short setup, as price will be bouncing down from both daily and weekly trendline resistances. So if price can come down next week for all ordinaries, then you may look for shorting opportunities in individual fundamentally weak stocks. The sideways market box setup is working well over and over in the Australian market. Let's look at Japanese market. And though I am analyzing different global markets, the techniques are exactly the same in USA market and vice versa. If I analyze something in the USA market, that is applicable to all other liquid markets as well. For Japan's topics, the weekly is bearish in color, indecisive in shape. Indecision is there for 2 successive weeks. looking at that, I am not going to consider any trade in the Japanese market right now. What may happen, what I may anticipate, it may not happen, but how am I positioning myself for trading now is, if this trend line support, in fact two of them, if they are broken next week, then I will happily look for shorting opportunities in the Japanese market, because the weekly is already bearish in color. If the trend lines are broken in daily, then we will have a lower high, lower low and breakdown situation that will give me individual stocks with either flow trend following short setup or breakdown short setup, or a combination of both. So I will look for a breakdown of the topics index, and if that happens, I may look for shorting opportunities. China market. In these examples, I am also illustrating how I may anticipate a trade in any market, and if what I anticipate takes place, then I am going to confidently place the trade. For China market, what we see is that the weekly, which is in a downtrend, has backdrop color and shape both as bearish. It's in a downtrend in weekly, and daily we may say it is moving inside a range. The lower end of the range is created by watermark support, upper edge is created by trendline resistance. It is in the middle of the range. I am not going to take any trade in this situation. I will wait for CSI 300 to break out in either direction before deciding my directional preference. India's Nifty 50, this is the strongest of the global markets at present. Weekly is going up with bullish backdrop for a long time. There were two neutral colors, but price did not come down. It is holding on to even the fast direction line on a closing basis. So that is a very strong uptrend. However, it is also overbought in daily above the upper boundary, and more importantly than that, we have jump thrust high. So it is extremely extended. On top of that, on Friday we have a bearish headwind signal. No bearish headwind short setup because the checklist conditions for the trade setup are not met, but we have the signal that is a reason for concern, that is coming at jump thrust high, and after a very long time we have big move down 3. So this big move down 3, the parent of all bearish momentum, is coming at jump thrust high, at price extreme high, and it is also associated with a bearish headwind in daily. That is not a bullish sign for the market overall. There may be individual stocks that we are able to buy, but for the market overall, big move down 3 at jump thrust high, price extreme high, almost always, I hesitate to say always, but you know, if you are tracking these signals how well they perform, almost always, I am going to use that phrase, almost always it leads to a pullback. Will the pullback happen on Monday? That is not sure. So if we are finding shorting opportunities, one way to trade them is to use verticals, short call verticals, for example, where time decay will be in our favor and we don't have to be concerned about getting stopped out if it goes up next week. But almost always this pattern leads to a pullback. So if we are looking at individual stocks, or in this case even the Nifty itself, one way to trade that is to use short call vertical. No trade setup as of Friday's close, so I am not suggesting taking a short call vertical on Nifty itself. However, there are individual stocks probably that are giving proper Q short setup on Friday. Market is too overbought. I will refrain from buying unless it is in some industries which were moving opposite to the market, maybe defensive stocks. And I actually bought some defensive stocks last week in the Indian market. You may find some of those stocks as lucrative buying opportunities now. So even the strongest of the global markets is showing reasons not to buy. What about UK market, FTSE index? This is yet another example of a range bound stock. In a range bound stock, we buy at the lower edge. We would have bought right on this day when we had a bull release signal at the lower edge of the support with a yellow color candle. So the daily was giving all the required conditions. We had bull pressure also. We had all the conditions for a box long setup on this day. In fact, we had even big move up 3. So we would confidently buy at the lower edge, and those trades would have given enough profit to book profit by now. Now it is coming to the upper edge of the range, not there yet. So we'll stop buying and we'll observe how it acts at the upper edge. Does it break out? Then we may look for long trades again. If it reverses like it did here, we would like to look for short setup using the concept of box and bounce short setups. That was a look at the global markets. None of the global markets are telling us to buy. None of them are also bearish probably as of Friday's close. None of them are bearish, but none of them are telling us to buy. Let's see what is the situation for the USA market. I was using Q Global for the global markets because Q Global or Meta stock can be used for USA as well as global markets, whereas TradeStation is only for the USA market. So Q Elite on TradeStation can be used only for USA market. Let's use Q Elite for USA market, and I'm going to use, let's use the futures. We have the future symbols already on the screen. S&P 500 futures. ES at jump thrust high, price extreme high, very overbought. Then we had a slight dip on Thursday and Friday, but that is a very slight dip. As far as ES is concerned, S&P 500 is concerned, it is still in a very strong uptrend. But is it at a buy point? No. I explained in the previous market recap in detail, when the market is at optimal buy point, that is the best time to look for buying stocks also. So the optimal buy point would have been here and here for S&P 500. Certainly not here when it is reversing from upper boundary with bear release and then bearish indecision and bearish shape. That is not the time to buy. What will be the time to buy again? If price comes to one of these two trend line supports, stops there and starts to go up, then we'll have a optimal buy point for ES S&P 500, and that would be the time to look for buying individual stocks as well. Again, that is a market level analysis. Individual stocks or industries that were moving opposite to the market may give buying setups now. And I bought some stocks last week. I shared them publicly also on the forum and or Twitter. I may look at some of them again. But at the market level, it is telling us that it is time to be cautious, not to keep on buying. not the stocks that were moving up, not the industries that were moving up with the market. For those industries, those stocks, we may be cautious. But that was only one of the market futures. Let's look at all of them to create an external view of the market. And you see how I am doing it step by step. First, looking at the external view using futures, or you could use ETFs or indexes. And then I will look at internals from different angles to decide my preferred trading direction, directional bias. So NQ was also at jump thrust high, price extreme high, and here we see on Thursday, Friday it declined much more. We know that from the candles length, color, and we know that even more from the fact that we had a big move 3 bearish momentum. For a long time we did not have that, and we noticed that the same was true for the Indian market. For a long time we did not have a big move 3 bearish momentum in NQ. It came this week on Thursday. And weekly also has a bearish headwind at the very top. We had another bearish headwind here in weekly, but that candle shape was indecisive. The indecisive shape of the candle, in fact we had an indecision signal also, that nullified to a large extent the impact of the bearish headwind. But that was then. Now we have, interestingly, we have a bearish headwind, we have a bearish indecision at the top, and we have a bearish shape candle as well. So the weekly is also clearly telling us that it is not the time to keep buying. Keep buying what? Keep buying the stocks or industries that were going up with the market. Is it in a downtrend? No. Even in daily, it is not in a downtrend. When could be a time to buy again? If price stops at one of these two trend line supports and goes up, that will give an optimal buy point for NQ. Probably it will happen in ES at the same time if it happens. If the supports hold, we see there are trend line supports nearby in both NQ and ES. If those supports hold, that will be the time to buy again for short term trading. Now I'll avoid buying. It's not time to short also. There is no short setup in NQ, there is no short setup in ES. Next, small cap futures RTY. Interestingly, it came very near to the trend line resistance and stopped there, and that is why always I avoid buying when price is coming near trend line resistance in either weekly or daily, and here it came to both weekly and daily trend line. So we wouldn't buy in last couple of days. Optimal buy point for RTY Russell futures would be on this day. That was the time to start buying small caps, not now. And we see jump thrust is approaching extreme level. For a long time, ES and NQ were at jump thrust high, but not RTY. But now we say thrust is already at extreme high, jump is approaching there. And it reversed in such a situation right from trend line resistances. So we could probably look for some quick day trades in last couple of days looking at these signals. If I for a moment switch to IWM, the ETF, we can see it in fact created a false upside breakout at the weekly trendline resistance. The false breakouts are even more powerful. So if you watched that, you could again use the signals, multiple signals, to take some short day trades on Thursday and Friday. There is no swing short trade in IWM at present, so I will not suggest that. IWM is also in an uptrend now. So there, as we are seeing, just 2 days of some weakness didn't change much in the market. It may not be the time, it is not the time, in fact, as far as market level is concerned, to keep buying again, keep buying what? Keep buying the stocks and industries that were going up with the market. It's not time to keep buying them, but it is not the time to short those stocks as well. Lastly, let's look at Dow Jones futures. This was inside a range for a long time. It broke out of the range this week. Now it is overbought above the upper boundary, stretched to the upside for 5 days in a row. So that is again not a time to buy. The optimal buying point for YM was here. After a swing low, the momentum color changed to green. At that time, you could look for industrial stocks to buy. Those stocks would have hit profit target by now. And now I'm saying using Q methodology, we are not going to buy now. So we see all the market futures are actually continuing in an uptrend and they didn't drop much. Thursday, Friday combined didn't drop much in any of them. Nothing changed. Market is remaining overbought, not a time to buy, but there is no bearish signal. And interestingly, I ran the internal health check that you can see in this very powerful single chart USA market breadth total view. There are no bearish signals in the market breadth total view also. If you see Thursday, Friday, there is no distribution count, not even one. In fact, I was thinking that after this series of bangos, we would have at least one of few sell-off signals. What could be those sell-off signals? It could be distribution count, the one that I find most reliable, and timely, very timely. But we don't have a distribution count, not even of one. One is actually not enough. We need to have distribution count of at least two for it to be meaningful. But we don't have any distribution count at all. And we don't have any Phoenix, thanks to Mr. Ian Woodward who created those signals. We don't have any Hindenburg also. So the internal health check is also saying that Thursday, Friday market dipped a bit. Yes, it is remaining overbought. It's not a time to buy general stocks that were going up with the market. But there is not enough sell off. What sold off probably to some extent were the mega caps on Thursday, Friday. And it is earnings season. Some of them dropped after earnings results. But the general market is holding up very well. There is no bearish sign even in market internal health. Let's see what we can find from sector industry stock breadth, that is in Q age. We can look at the longer term period, 1 month period, sector advanced decline, industry advanced decline, stock advanced decline, very bullish. 10-day, that is still long term, is also very bullish. 5-day, that is medium term, this week is also very bullish. We have some sell off over 2-day and 1-day period. More sell off if you consider Thursday, Friday, 2-day period. Friday, if you look at industry and stocks, the granular level, more granular than the stock level, sorry, sector level. Sector level seems more bearish, but if you look at industries and stocks, which are more granular than sector, it's not that bearish. In fact, it improved from 2-day period. So yes, Thursday, Friday, we saw some selling, but even from sector industry stock breadth, it was not a major sell-off. And if we look at bucket analysis, 80% of Q Edge stocks are above mid Bollinger Band. That is clearly bullish. From Thursday, it reduced very slightly from 82% to 82%, remaining very bullish. and it is neither oversold nor overbought. So we have not enough, hardly any actually. Probably no bearish. Yes, some sell off was there Thursday, Friday, but not enough bearish signal to change our view of the market. My view is remaining the same. Overbought, not a time to short, not a time to buy. That is at the market level, but we still have to look at one more angle of the market. I have to, that is the technical breadth, and there we will see some more warning signals, and this happens over and over again. And these are signals that are not to be ignored, because we are trading to follow the direction of the market. If we buy a stock, we only make money if the stock goes up. So technical signals are very important for making money. Industry is there to support the buying decision, very effective. Fundamentals are there to support the buying decision, very effective. But finally we make money based on the stock moving in our direction, trade direction. So technical breadth is of course most important. Price is the king. And there we see, when we see warning signals there, it is not to be ignored. And one of the warning signals that was not there for a long time is the headwind signal alert. When it hits a certain threshold, we did not have that, and it is to be looked at on the weekly interval. Now the weekly is showing too many bearish headwinds, the reversal signal at the top. That is concerning. Overall signals are bullish, but that is expected. The headwind is a reversal signal that comes at the top, and that is flashing the warning signal in weekly interval. And daily has many warnings that are continuing. I shared some of them in the last market recap also. And this weekend again we see alert on jump thrust high. Too many stocks are too extended. Daily also had the headwind alert. Too many stocks reversing from the very high, and red candle high, thanks to Mr. Ian Woodward probably. I don't know, it was there in HGSI. It is there in HGSI also. Not sure if it was invented by Mr. Ian Woodward or it was a general indicator that is available in the market. Red candle high, bearish candles at the top is also hitting the threshold. So visually we have many reasons, much more reasons to be cautious when we look at technical breadth that we did not see when we looked at market external view futures, market internal view health check, even sector industry stock internals from advanced decline breadth. So technical breadth is telling more strongly to stop buying. Stop buying many stocks that were going up with the market. So if that is the view of the market, what could we do? We could look at stocks that were not doing well earlier, and maybe there will be rotation into those stocks. And I shared one or maybe few such stocks. Let's go to the forum. In this forum, there is a 360 degrees analysis category where I share stock analysis, buy side or short side, before knowing the results. And I will not pick and choose, that's not my way of analyzing the market. Let's look at last couple of stocks I shared. One was this stock PHM, and we will, the more we observe, go back and study the analysis I did in live market, the more we will learn something. So this was on PHM, I think Pulte Homes. Why you may not buy this home builder now, I shared it 5 days ago for PHM with all the Q live snapshots. Let's look at them. Q age was showing in real time. This was as of midday. You can see it from the timestamp, 18th July, 5 days ago. That home building, which was the strongest for some time, one of the strongest for a very long time, The strongest here is 153. I can see the number of industries in real time. They're all calculated in real time. Right now, we have 153 industries in USA market. So it was the strongest for a very long time. It weakened a bit, but it was still one of the strongest. But it weakened rapidly. And this is as of 18th July. I am doing the live analysis. And how rapidly we can see that from pace, it was decelerating very much. Pace was one of the bottom 20%. And that is a industry that is, I'm not going to consider buying in that, I may consider shorting. This is a turnaround, bearish turnaround candidate. I love turnaround. So whether it is in stocks, industries, or even fundamentals in terms of earnings growth. So this was a turnaround from the top. And I saw this stock PHM in that turnaround industry that was down on a day. Market was bullish at that time. Fundamentals were not bad. In fact, it had high earnings growth, more than 25%. Even fund accumulation was there. And this probably requires some discussion. When I buy stocks, I look for stocks with fund accumulation. I look for stocks with high earnings growth. Why will I consider shorting a stock like PHM? When I'm shorting a stock, I look for no fund accumulation. I'm looking for negative earnings growth or overvalued stock. But these stocks fundamentals were still strong. So therefore it requires some extra discussion. Why would I share a not so bullish view? Am I thinking of not buying the stock anymore? Yes, that was one thing. That was the title of the topic, why you may not buy this home builder. But you could consider shorting with some additional understanding, and that understanding is fundamentals will always lag the technicals. Fundamentals come out once in 3 months, quarterly earnings. I ignored the fundamentals only in one case, when the stock is at a very high price and I am having a lucrative shorting opportunity. That is one case where I ignored the fundamentals. Again, only one case I ignored the fundamentals. That is when shorting a stock that is at a very high price level. Industry I don't want to ignore, and here the industry was allowing me to short. And this is what I saw in the stock, and this is real time, not at market close. What I saw: jump thrust high, price extreme high, then came big move down 3. Almost always that leads to a down move. Almost always. Again, I'm hesitating to use always, but you know what I mean if you are watching these signals playing out over and over again. I had jump thrust high at price extreme high. All of a sudden came a very bearish day. Usually that leads to a downfall. The downfall may not come immediately. It did go up, and I am analyzing it on this day at the right edge. I saw a bearish headwind in both weekly and daily, and earnings was in a few days. So in this case, of course, I would not continue buying. That was again the title of my topic, why you may not buy the home builder now, this home builder. But I did short the stock, and probably what I did also, it's worth discussing that. Usually I don't like to buy naked options either on the call side or put side. Again, there is one exception. That exception is when I am having a stock with bearish signals, rather setups. I would like to have the setups at the very high level. Then the time decay is more than compensated by increase in volatility if the stock comes down. So I have no disadvantage from time decay if it follows my trading direction. And if I am buying a put, I don't have to apply a stop. I just need to position the size accordingly. So that was the thing I had in mind, that exception I applied, that if I am shorting at the very top, I don't worry about the time decay so much. I just position it so that even if I lose all the money in the options, it is a certain percentage of my equity. Then I may also spend some time discussing what expiry did I use. This is earnings season. Pulte Homes earnings was coming soon. In fact, if I go to the Q Vital snapshot, remember I am sharing this post on 18th July and the earnings was due, actually is due on 25th July. Not out yet, and I'm sharing this post on 18th July. Earnings on 25th July. What is the nearest expiry after earnings? That was and is 27th July. So I bought a put option on PHM expiring 27th July just after earnings. And you see, when I'm sharing the post, I might have traded before. Of course, I would not might have. I always, if I am trading, I place the trade before. I am very open about it before I spend time cutting pasting all the snapshots, because these are not meant to be trade tips. I am not suggesting people buy using my analysis, but it is to show a disciplined analysis of the market, and in this case how you are able to, or I am able to short at the very top, at the very top. So I shorted. What strike? That is one thing I may explain the last part of my trade. The stock was at 81.55. Now I could buy at the money, I could buy in the money or out of the money. What is special about this trade? It is expiring right after earnings. What is expected to happen? Either it will jump up or jump down. If it jumps up, my option will expire worthless. If it jumps down, I'll have a huge profit. It is binary. It is very unlikely, especially when it is at jump thrust high, price extreme high. We have big move down already, that after earnings it will just move sideways. Almost impossible in this case in my mind. So it is a binary event that is going to unfold. Either it will go up or come down substantially. Substantially is a relative term, enough for me to make substantial profit or make my option worthless. So if I am looking for such a binary event, why not buy little bit out of the money? Little bit, not a lot. So what I did, I bought 81 put for PHM expiring on 27th July. I bought it just before I spent about 5 minutes probably sharing the snapshots. Now see what happens. I am always managing my risk, of course. I am not putting a lot of money in naked options, because naked options can be worthless if it goes against me rapidly. Let's see how it played out after I traded that. I think I followed up a bit on Twitter. No, that's not what I wanted to see. Let's go here. PHM. Well, let me go to Metastock, because the snapshot I shared was from Metastock Q Global. Let me follow up also on Metastock PHM. I want to point out a few things. Which day was 18th July? Let's see. This day. This day. That day was 18th July. When I shared the post during market hours, it had a bearish headwind. But we can see at the close of the market, PHM recovered little bit. The color turned green. We had a bearish indecision, but the bearish headwind disappeared. But I was already in the trade. Next day, I watched it because I already had a position. Next day, in fact, during market hours, again a bearish headwind came. But again it disappeared, as you can see near the close of the market. But I was already in the PHM trade, and on this day, notice how slightly it moved. How slightly. Between the day I entered the trade and next day, it did come down. And when it came down to the low, I think I tweeted about it. Let's see. It it had a significant percentage profit. Not enough for me to book the profit, Okay, not cannot locate that post. I don't know if I posted it, but let me go back to the chart. Even this slight move down from these two to next day's low, it had I think about 18% profit, but that's not enough to book my profit in the trade. Not in this case, naked options put buying. So I held on to the trade. I was ready to hold on. Next day it jumped down. What we also saw is a big move down again. Remember I told, when we have jump thrust high, price extreme high and big move down 3, almost always it leads to a pullback. What I don't want to do is trade with a strategy where I need to get stopped out because of temporarily price going up. So I used long put, I did not use short stock. I could have used short call also, but in this case I explained the exception when I buy options, that is when I am shorting at the very top. Industry is also at the very top, turnaround candidate both in terms of stock and also in terms of industry. What happened on Thursday? It hit 150% of profit and I booked my profit. I have some guidelines. If I have more than 100% profit in a few days in naked options, I take it. I don't wait. Could it become 300, 400% after earnings? Yes, it could happen, but that is an uncertain event. If in 2 days I had 150%, anything above 100%, in fact, anything above 50%, I start booking profit if it is happening in few days. In this case, I had 150% profit. So in fact, I closed my entire position. Earnings is on 27th July. I did not take risk holding through it because I already had a good profit. I took money off the table. Now, this was a turnaround candidate in terms of technicals and in terms of industry. And if you noticed, and I did when I took the trade, if you notice the earnings growth for last 3 quarters, yes, it is high, but it is also coming down. And I highlighted that on my snapshot. It is not a trade tip, but I try to help people with all the things I am watching when deciding my trade. So it was in fact a turnaround candidate in terms of fundamentals also. It's not a positive sign. What will happen at earnings we don't know, but it is not a positive sign that for successive quarters earnings growth is coming down. So it was in fact a turnaround from all angles, and I took a short trade and I booked profit in that trade. That was a short example. I don't know what is the next, the one idea that I shared just before that. I'm looking for a buy idea that I shared recently. This is Goldfields International. That's a gold mining stock. I already explained in earlier market recap. I booked profit in that. So there are other stocks I shared on Twitter, and one stock that I'm holding. Let me share the stock that I'm still holding long side. I shared it also publicly earlier. It has not hit profit target. It has not hit stop loss. Why I am sharing this is because of the comment I made earlier. The market is at a very high level. So I am not happy to buy stocks that were going up with the market. Market is clearly overbought. Technical breadth is having even more warning signs, but there are still stocks to buy. And Elan that I shared in, I think in the previous market recap. Yes, it was not on forum, it was on the market recap, and it would be elan.k. You may go back to my market recap of previous week to see the way I analyzed it. I shared the buy idea right on this day. It was just starting to turn around from, again a turnaround candidate, from downtrend to uptrend. I bought, or I suggested buying. Yes, I bought also on this day. And it is holding on to the gap up gain. On Friday, we have another bullish flow. I have a small profit in the trade. I will see how it goes, but this was in a defensive industry, pharmaceuticals, actually animal health company, Elan, and I'm holding a long position in it since last week when I shared it. Now we saw technical breadth is having many warning signals, but I am not happy to short because the market is not giving any short signal. Having said that, because we have many reversal warnings in the technical breadth in daily, let's look at the bearish setups. And because market is at a high level, I am using this paintbrush. First I look for the stocks with bearish setup, one or more. Then I am going to use this paintbrush. These tools are very flexible, visual yet flexible. You may use it in different workflows and see how I am using the tools with the market view I am having. I saw market is at a very high level, then I am seeing warning signals at the top. So why not look for short candidates, but also short candidates that are at very high level, just like PHM example I shared just now. Let's click this. We still have 38 stocks. Interestingly, and I'm doing it live, I didn't see this earlier, many of them are breaking down from price extreme high. Those could be lucrative short opportunities if they have low risk entry point. Let's look at the breakouts, flag for them. I see one of them also has a bearish headwind signal. Interestingly, FedEx. Interesting because it can be a reflection of how the economy is doing. Let's look at FedEx. FDX is the ticker symbol. Very interesting. And see, instantly, I looked at the chart doing it live. Instantly, the Q signals visually tell me something or tell you something. It is at jump thrust high. It is at price extreme high. We don't have big move down yet. We have big move down 2, not big move down 3. But we have enough signals telling us not to buy. Series of bearish headwinds, bearish indecision, and also bear release. In fact, series of bear release signals. On Friday, it broke below the trend line support with a bearish headwind signal and a bear release signal at price extreme high. Therefore, it may probably be giving a headwind short setup as far as daily is concerned. Is it really giving? We could find it out either from the commentary on Q Global. Yes, it is actually giving a headwind setup as well as a breakout setup. And if we look at the pattern analysis, after setup analysis, we look at the pattern analysis, it is showing attractive patterns for shorting, that is at jump thrust high as well as price extreme high. And what is the other way to confirm the setups? That is of course Finder, from where we came. And the Finder also showed that we had possible headwind setup and breakout short setup in FedEx. We could also Q Elite on TradeStation for that. There are multiple Q Elite Finder layouts. Let's use the middle one today, which has all the setups as well as some additional signals. that also shows that we have a possible breakout short setup. Okay, headwind is not there. Sometimes the platforms are slightly different because of the way they are implemented. The underlying codes are different. So we can see on TradeStation we don't have a bearish headwind on Friday. That's why it's not showing the headwind short setup, but it is showing a breakout short setup. And of course those other signals are same: jump thrust high, price extreme high, series of bearish releases, bearish indecision, series of bearish headwind also. Now let's check FedEx fundamentals and when the earnings is coming. And then we look at the industry also. Will it be a case similar to PHM, the one that I shorted? Let's find it out after completing the 360 degrees analysis in real time. You could do it during market hours just before market close, and if you had a setup you could take this trade just before market close, or you could do it after market hours like I am doing now. Fundamentally I can already see that this stock allows me to short. Valuation is medium but earnings growth is negative. Remember, the stock was at jump thrust high, price extreme high. Many indecision signals on technicals, and I see earnings growth is negative and it is slightly coming down or not going up at least, and it is negative minus 28%. Revenue is sharply coming down quarter after quarter. That allows me to short dividend. I am looking at everything in one glance. Dividend is also not much that I am going to buy it for dividend. In any case, a stock at a very high price level is not worth buying such a stock based on only dividend, and in any case dividend is also not there. The earnings is actually not immediate, interestingly, it's 20th September. So we have enough time before earnings. The last thing I would like to look at is the industry scorecard. Does industry allow me to short? The industry is still not very weak, but it is weakening, and I see pace over 2 days is among the bottom 20%. That is a decelerating industry, so the industry allows me to short. So we have found another candidate where the industry allows at least me to short, the technicals allows me to short. But let's go back to technicals and let's look at it again. It is a short, but it is a reversal short at the very high. In this case, just like I explained in case of PHM, I don't like to short using stocks because I will get stopped out if it goes up little bit. Instead, I would like to short using short call vertical in this case. There is no binary event like earnings nearby, so I'm not going to use long put that I did use in case of PHM. There is no binary event nearby here, so I'd like to short it using short call vertical, so I don't have to get stopped out, and if it comes down little bit I like to book profit at 50% of max profit. But I didn't conclude on that yet. Why not? Because FedEx is only one of the stocks in the industry. I have the other 10 stocks in industry shown, and these are picked up in real time. They are not hard coded anywhere, picked up in real time from Refinitiv. Used to be called Reuters earlier, now Refinitiv. I have other stocks. Why don't I see if any of them are giving me possible short setup? Let me close FedEx. I am now looking for a better candidate to short, if any. So let's look at all the stocks. I saw FedEx had negative earnings growth. Why not I only look at stocks that are with negative earnings growth? Clicked one button. Now I am left with the peer stocks 7 now that are with negative earnings growth. Some of them are undervalued, but FedEx was not undervalued, it was medium. I'm not interested in shorting undervalued stocks, so let me focus on only these stocks. Wait, let me exclude FedEx. So I'm left with only three stocks: UPS, CHRW, and EXPD. They are similar to FedEx in terms of fundamentals or worse. Similar in that earnings growth is negative, and similar or worse in terms of valuation, either medium valued or overvalued. Some of them has small dividend, not high enough. When the dividend is less than bank's CD interest rate, fixed deposit interest rate, the dividend in my view is not the reason to buy the stock. None of them have fund accumulation as bullish, which was the case for FedEx. So in terms of fund accumulation, these three stocks are worse. Interestingly, none of them came down on Friday. So let's look at their charts. Finally, technicals have to be aligned for us to take a trade. This is EXPD, Expeditors. It is overbought. It is having cluster of bearish indecisions. That is certainly reason not to buy, but it has no short setup, and we have multiple trend lines nearby. So it is not going to give a short setup anytime soon. Too many trend line supports are nearby. So let's close this. CHRW, you can see the ticker symbol at the top of the MetaStock panel. CHRW moving in a range, in a box pattern, right in the middle of the range. That is a no trading area. In a range bound stock, we like to buy at the bottom, short at the top. When it is in the middle, no trading range. So let's close this. UPS, a close peer of FedEx in the same business as FedEx. This is having some of the similar characteristics. Bearish headwind, cluster of bearish indecision. What I may wait for now is for this trend line support to be broken, and if that breaks, then I am happy to short it using the same strategy, that is short call vertical. Let's look at UPS. This is UPS, ticker is also UPS. Let's look at UPS earnings date, that is 8th August. So UPS earnings date is coming nearby. Short call vertical will be appropriate for that also. So we could take a short call vertical in UPS if it breaks down below this trend line. Okay, sorry, before that, before I make that statement, let's me look at weekly, daily. I always like to look at weekly, daily both. Yes, weekly is also at the upper edge of the range. So if this daily trend line support is broken, I am okay to take a defined risk short strategy, that is short call vertical. So this is UPS. Let's look at FedEx again. Which one would I prefer? I would favor FedEx actually. FedEx, because it has more bearish signals at the very top, and it has already broken below trend line support. Weekly has bearish indecision. There is a watermark support here which was broken, so it may come down below that or retest that level at least. So whether it retests that level or makes a false upside breakout, we'll have a profitable trade by then. It's at, I think, 250 level. At which level? At 250 level, so it is about more than $9 above current price. Even if it retests that level, a short call vertical will give us reasonable profit, because short call vertical will have time decay also in our favor. See how I decide a final trade after looking at the peers. In this case, FedEx happened to give me a better choice. Now, is that the best shorting candidate I could find? No, probably. I did not look at the other many stocks that we have in QFinder with possible short setup, but this is the way you look at multiple potential candidates and decide which one to short. Probably we could find a weaker industry. We saw FedEx industry is weak, but it's not the best weak or the worst industry to short. It is a possible short trade, but we could probably find other short trades also, and we could find some buy candidates as well probably. Elan, in fact, if we look back at Elan, Elan could be probably bought on Friday as well. That's that's something to consider. I bought it on this day when it gapped out of the range. I shared it at that time. Now it has moved sideways for a few days and it went up. So if you didn't buy it on Friday, if you didn't buy it on this day, that's fine. I think if it goes above Friday's high on Monday, that may be giving a buy signal again. It got approval for certain kind of FLIA collar on this day. That was the reason for the gap up. Earnings is coming, maybe not immediate, but earning is coming soon. This is earnings period. The impact of that approval may be reflected in next earnings, maybe. But in any case, it is a short, it is a narrow stop buy candidate. That's what I always look for. Okay, I will not take more time to look at stocks. My aim through these webinars is to show a disciplined way of trading and align as many forces as possible, but without spending too much time, and using real-time analytics so that I and you can take the trades just before market close or maybe in the morning session after signal day. We don't have to wait for market close to take the trade next day. We can take it on the signal day itself. That is my aim, and I share my analysis with that aim. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session, most likely next weekend. I'll announce the date time on Twitter as usual. Have a great weekend, and as I always say, as this live analysis I share on my YouTube channel, on my Twitter page and forum page show, there is no reason not to do that. Trade profitably. Thank you.